From the financial centers of the world, this is Bloomberg Markets with Alix Steel and Guy Johnson.
Monday the 13th, 3 p.m. in London, 10 a.m. in New York. We're 30 minutes into the trading day in the United States. From London, I'm Guy Johnson, Alix Steel over in New York. Welcome, everybody, to Bloomberg Markets. Folks, I can't work out which is going to be more important to Alix today. The fact that schools have gone back in New York or that energy prices are shooting higher.
Ooh, it's like choosing between my two kids. I can't answer that question.
You've only got one child.
I know. Because it's 10 o'clock, I'll go with energy prices for now. Maybe school will be more important come 3 p.m. Okay, so let's take a look at where we are. First off, S&P is up by 0.4%. We have 5 straight down days last week, but now we're in the green. But it's all energy leading the way. You got Marathon, Oxy, Apache. Those are all the top performers within the S&P. You can see crude up by another 2 percentage points. On the downside, though, we have the likes of Moderna after a study showed that maybe we actually don't need some boosters. But within it, we're seeing a lot of volatility. And this goes to Lori Calvasina, RBC, talking about how she still expects a pullback, 5 to 10%, but a lot more volatility going forward. Volatility picking up a touch, but we're still under that 20 mark, Guy.
Yeah, Lori was really interesting earlier on. She was talking about basically the fact that you are going to see a dip, but you want to buy it. To get ready, it's all about positioning, but she's got, actually for next year, her target's fairly positive. We'll come back, we'll talk about that a little bit later on the program. Let's turn now to what is happening, as I mentioned, in New York. Alix, huge day for you, huge day for loads of parents as well. All of New York City's public school students are expected to return today to school. Let's figure out exactly how this all is going to work. Remember, students and staff required to wear masks, buses, on schools, on school property, basically indoors and outdoors, regardless of vaccination status. This is the UK is announcing that it's going to vaccinate with one shot of Pfizer 12 to 15-year-olds. Joining us now, Drew Armstrong, Bloomberg senior editor for healthcare. Drew, kind of walk us through the risks that we're running sending kids back to school, both from a public health point of view, from a parental point of view. How many of these kids are vaccinated?
Well, you have about 2/3 of the eligible population in New York City of the school kids, I believe, that have received at least one dose. And obviously, if we get a expanded authorization to vaccinate younger folks, that number will certainly go up. I think one of the things that's worth keeping in mind here is that, you're putting kids back in schools. There are precautions that are in place, but you are still going to see a rise in cases. I think any time over the entire course of this pandemic where we have gone from, keeping people in their homes and kind of in a really constrained situation to saying, hey, go back to the office, go back to school, go back to restaurants, you get cases. I think the question is going to be, how many, what do those numbers look like? And really the important thing is going to be, do you see, meaningful upticks in severe cases or kind of increased household transmission?
All right, Drew, thanks a lot. Bloomberg's Drew Armstrong joining us there. As you mentioned, there was a scientific study that said most people actually don't need a COVID vaccine booster. We're better off just trying to vaccinate as many people as possible. All right, here's somebody else back in action. U.S. Congress. We're already seeing House Democrats compromising on President Biden's tax plan. They drafted a package of tax increases that fall short of President Biden's proposal. Bloomberg Washington correspondent Joe Matthew joins us now with the details. Joe, it's like trickling out. I honestly can't keep track of everything, but we're looking at higher corporate taxes, but not as bad as maybe President Biden wanted.
That's right. That's kind of the story across the board here, Alix. We've got a higher corporate tax rate, 26.5%, higher capital gains tax rate, 25%. To your point, both are below what President Biden asked for. But the Ways and Means Committee also added some things that he didn't ask for, like a 3% surcharge on people making more than $5 million a year. That would generate some $127 billion a year. If you add all of this up, and again, all this is likely to change. The price tag comes to $2.9 trillion. Remembering the goal was $3.5 trillion. The thing is, when you add dynamic scoring, and by that I mean how this bill might pay for itself by spawning economic growth, you magically get to $3.5 trillion. Now, Senator Joe Manchin, as you've been hearing a lot, says that's too rich for his blood. He doesn't like that price tag. But knowing that this, in fact, apparently pays for itself, at least through the eyes of House Democrats, might give him a little bit of cover. Manchin's not the only one, though. Giving us a sense of how tenuous all of this is, Senator Mark Warner of Virginia, a Democrat, threatened last night to vote against all of this if it didn't have more money for affordable housing. Just reminding us of how much work, Alex, Democrats have yet to do.
I'll pick it up, Joe. Some horse trading still ahead. Great stuff. Thank you very much indeed. Bloomberg's Joe Matthew on what is happening in D.C. And tune in to his show, Sound On, weekdays, 5 p.m. in New York. You can find that show on Bloomberg Radio. Let's turn our attention to what is happening in China. China's Evergrande Group facing mounting protests by home buyers, retail investors, even some of its own employees. This as it raises the stakes for the authorities in Beijing as they try and figure out how to prevent the property giant's debt crisis from sparking social unrest. Joining me now on set, Bloomberg's Tom McKenzie. Tom, the authorities can't have social unrest, so how do they fix this problem?
Well, you point to the heart of the matter, which is social stability. Absolutely central, as you allude to, for the Communist Party. They want to ensure that that does not spiral out of control. It's not unheard of to see protests in China. It is rare. You're seeing it now in Shenyang, in the north of China. You're seeing it in the south, in Shenzhen and Guangzhou. So the question again is, do they ride to the rescue? We've been watching this brew. It's gone from the boardrooms to the streets now. And as you said, it's not just investors who, by the way, have been buying wealth management products, and that's been tying the company over in terms of funding for the last few years, but also employees, as you said. We saw that in the north of China, and home buyers themselves. 1.5 million people have put down deposits on properties that have either stopped being constructed or in the process for Evergrande. Last week, we saw regulators coming out and approving a plan by Evergrande to restructure and to delay some payments to banks and creditors. Do they change that now on the back of these protests? Just a reminder for size and scope, $300 billion in liabilities for Evergrande. They came out today, said the rumours of a default or the rumours of bankruptcy are not true. Bondholders, though, pricing in a default.
Tom, thanks so much. Really great to see you. Thanks a lot, Tom McKenzie of Bloomberg, joining us. All right, let's move to the market-moving data points this week. U.S. CPI out on Tuesday. That's really going to set the tone. Michael McKee, Bloomberg International Economics and Policy Correspondent, is going to break the rest of it down. Mike, what do you got?
Well, the good news is we don't have to wait till Friday. You know, like on Jobs Week, it's always wait till Friday. We get CPI tomorrow, and that's going to be the big number of the week for everybody to watch. But we have some numbers throughout the week that are important. Wednesday is about manufacturing for the most part, and a lot of people are going to be interested in whether or not the Empire Manufacturing bounces back. Fell a lot last month. Thursday, did Alex buy her new winter coat? That's the picture there.
She did not. She did not.
Okay, retail sales are going to be awful. You just heard that now from Alex. And Friday, the Michigan sentiment numbers, those have collapsed too. What does that mean for the retail sales going forward? Now, the number we're going to watch, as I said, is the CPI. And what everybody wants to know is what's happening with the so-called transitory areas of prices that have been going up. Used cars, rental cars, lodging away from home, and airfares, those have started to flatten out. And if that continues, people are going to feel a whole lot better about the Fed's argument that inflation will be transitory. And you can see how they've flattened out over the past month. And the expectation is those are going to drop. But the joker in the pack is what happens with housing, because that is a real mystery out there these days. You can see what's happened with this is the Case-Shiller numbers. Home prices over the last couple of months shooting up, and yet we're not seeing a real reaction in the equivalent in the CPI. If this starts to go much higher, we're going to have inflation concerns embedding themselves much more deeply on Wall Street, and that'll be a worry, Alex.
Mike, I want to come back to this coats thing because I think it's going to be important, particularly here in Europe. Alex Steel might not need a new coat, but I might need a new coat because I see what's happening with gas prices right now. You bring up the issue of inflation. Gas prices absolutely shooting higher across Europe. We've seen record highs in the UK today, in Germany today. It's going to be a massive problem. And Mike, I think this kind of is going to be a story that we're going to focus on. Commodities. I can't believe that I'm having to push this as hard as I am. Alix Steel, obviously, standing there with a big smile on her face. Basically, commodities are surging again. We're back in business. Aluminium is up, Alex. Steel is tracking higher. Gas prices are moving up as well. All of these stories coming to the fore. Mike McGlone, Bloomberg Intelligence commodity analyst, joining us now to give us his take. Mike, take your pick. There's a range of areas that we could focus on here. Metals are moving sharply higher, but to me, the story is in what is happening with nat gas.
My first and most notable response is be a responsive seller. Elasticity of supply is the key problem in commodities forever. Just follow, I expect them to follow lumber, which is down in the year, corn, which is almost down in the year, copper, which is, it's peaked at $10,000 a ton, aluminum just got near $3,000 a ton. Elasticity of supply comes out every time commodities try to rally. Let's look at crude oil. Yes, it's up today. Natural gas, most notably Europe's up. It's more for shorter term things. In the U.S., it just reached the highest price since 2006. But U.S. shale usually comes right back, and that supply comes back because of rapidly increasing technology and bringing on supply. What I see in metals now on the day is the only metal that's really up on the day is gold. To me, a year from now, that's the most likely commodity I see that's going to be up a year from now.
And all of that wrapping into that inflation narrative, too. Mike McGlynn, Bloomberg Intelligence, thanks very much. We're going to talk to Jeff Curry of Goldman Sachs later on in this hour. Their call overnight is that you're looking at a growing scarcity across physical markets pretty much across the board. All right, coming up right now, you got Olivia Engel, State Street Global CIO of Active Quant Equities, will join us. She says chip makers and healthcare, good places to invest. More on those calls next. This is Bloomberg. Well, RBC's Lori Calvasina was on television earlier talking about volatility. She does expect to pull back 5 to 10% at some point and sees a lot of volatility picking up, some dark clouds circling. That's echoing a lot we've heard from most Wall Street strategists and even covers of newspapers over the weekend. We're talking just about that. This is where we are at. S&P 500 fell 5 sessions in a row. We haven't seen that in quite a long time. S&P now up today, helped in part by energy. But what do you do if everyone's getting nervous and there are some catalysts that are lining themselves up, whether from DC or earnings? Let's get some perspective now from Olivia Engel, State Street Global Advisor, CIO of Active Quantitative Equity. Olivia, your call in terms of volatility and a pullback that everyone seems to be clamoring for.
Yes, I think just given the uncertainty around the trajectory of this pandemic and what might happen with inflation, quality is really an important characteristic to look for in companies. And we still see that in many segments, some high quality, some areas where we can continue to make money for clients there.
If there is going to be a correction, what's the best place to hide out?
So we think there's lots of different areas of the market that are looking good. Healthcare is one of our favorites. It has been for some time. There's some really high quality there, some continued demand for their goods and their services. It's a secular demand and some very high quality going on there. Reasonably valuation is always able to be found in healthcare. The other area is probably the semiconductors, which world semiconductors just look fantastic from a quality perspective, and you can still find good value there, despite people thinking semiconductors could look like a big crowded trade right now. I mean, they've had enormous returns, but they really are on the right side of the supply chain bottlenecks and the pricing power.
Yeah, let's talk about that supply chain bottleneck and pricing power, because some of the concern is that we're going to see a higher inflation, input costs, labor costs, squeeze margins. It's going to kind of weigh on earnings maybe in 2022. We heard the likes of from Kroger, for example, on Friday. How are you modeling that kind of price pressure when the levers that companies have may not be available to pull?
Yeah, well, I think that's a key reason why some of the other value areas of the market may not be doing so well. So, for example, capital goods or automakers. They're really suffering at the tough end of the supply chain. If they can't get the goods they need to make the products they make, then, they can't make any money. I mean, that's all there is to it. So, there is definitely risks there with the supply chain, but it's opportunity for some other players.
Olivia, small caps have underperformed recently. Chinese mega caps have underperformed recently. Are there areas that have already been beaten up that actually you want to think now could be the opportunity to rotate back into?
Yes, I mean, we've been saying for some time that it's the Chinese large cap consumer discretionaries were really looking very crowded. 6 months ago before they had their big pullback. That doesn't mean all discretionary stocks look bad. And in the small cap segment, there should be a lot of resiliency there, particularly in the made in China push, The small caps that operate more domestically, I think there's a good chance that they do continue to do pretty well in China, the local domestic consumer discretionary stocks.
Olivia, when it comes to China, what's positioning like right now, considering the shakeout that we've seen, and then how exposed are investors to those consumer or small cap stocks, for example?
Yeah, I'm not sure they do have a lot of exposure actually, because the mega caps really dominate most of the major indices, and that's I think where people need to be careful of the exposure they have in the discretionary segment, because there are a lot of risks overhanging the mega caps, but a lot of underlying economic support for the small caps. So it's harder to look for those names, but it's definitely worth doing so.
Olivia, I'm looking at the market and I'm thinking about the amount of liquidity that continues to slosh around. I'm looking at money markets accounts that are still absolutely packed full of cash. And I'm wondering, on the other side of the ledger, what is a big enough force to unsettle this market? What's not priced? A tax is not priced? Is ongoing inflation and it not being transitory not priced? I'm wondering what is big enough to offset that huge amount of liquidity and cash that's sitting on the other side.
Yes, exactly. And the domestic the diversified financials are absolutely winning from the cash that has been put to risk in the market, driving equity markets up for so many months. And domestic financials, diversified financials, which were doing so poorly last year, really have been benefiting from this risk-taking, liquidity pumping into the system and driving risk assets up. So diversified financials have really seen that. It's an unlikely value play that's eventuated this year.
Olivia, how do you look at taxes? David Kostin of Goldman Sachs wrote in a note overnight, the stock market is only partially pricing an increased tax rate in 2022. In the uncertain economic and tax policy environment, stocks with stable earnings and strong balance sheets should continue to outperform. Lori Calvasina is also saying, we're not priced in for higher taxes. What's your modeling?
Well, actually, I think taxes is probably one of the lower priorities of what needs to be modeled right now. And the experience comes from when the last administration made tax changes and the resulting impact on stock selection. We found that it was fairly muted, the reaction. So we think the bigger things to focus on are definitely interest rate exposure, inflation sensitivity, making sure you're not overpaying for quality, but still remaining to have lots of good high quality in your portfolio. So I mean, resilient earnings, strong balance sheets, sustainable long-term thinking by management in the form of good governance practices. All of that is really important in this environment where inflation, we just do not know that every player in the market does not know how to play the inflation game because they haven't had to do it in decades.
No, a long time coming, but maybe it's here now. Olivia, great stuff. Thank you very much indeed. Olivia Engel, State Street Global Advisors, CIO of Active Quantitative Equity. Alex, we'll talk more about this story around taxes a little bit later, but my sense is, they're going up a little bit. Not as much as everybody had feared, and as a result of which maybe the market is reasonably comfortable with it.
But I guess my big question, though, comes with buybacks. Like, if you're going to start taxing that, I mean, corporate buying of their own equities has been a huge supporter of the market, and that to me is a bigger question mark. What does that rate come down to, and how do corporations respond to something like that? As you say, it's been a hugely effective tool, and the way that the market is structured, with debt being the way that it is at the moment, it's provided huge opportunities for doing it. We're going to talk about Apple later on. Apple has tons of money on its balance sheets. It's buying debt. It's selling debt because that's the logical thing to do. Precisely. Why not? Well, no, the market is in favor of it. Equity versus debt. Debt definitely wins out. Anyway, we'll talk more about Apple next. We need to kind of dig into that epic story, and we've got a new iPhone coming up. We'll do all that next. This is Bloomberg.
It's time for the Bloomberg Business Flash to look at some of the biggest business stories in the news right now. I'm Ritika Gupta. Restaurant payments app Toast is seeking to raise as much as $717 million in an IPO. That would value the company at about $16.5 billion. Toast says its software is easy for restaurant workers to use and lets diners order food online, in person, or over the phones. Credit reporting firm TransUnion has agreed to buy data company Neustar for $3.1 billion in cash. The sellers are investors led by private equity firm Golden Gate Capital. Neustar offers services that help verify digital identities. And Kansas City Southern is backing out of a merger deal with Canadian National Railway. Instead, it will accept a competing $27 billion offer from Canadian Pacific. Canadian National's bid was higher, but it began to unravel amid questions whether it would win regulatory approval. At stake, which railroad would become the first to operate in Canada, the US, and Mexico. And that is your latest business flash. Guy?
Rebecca, thank you very much indeed. Let's turn back to that news we spoke so much about on Friday. In fact, it really dominated things. Analysts say the US court ruling against Apple, this is the epic story we're talking about here, could wipe billions from its profit, forcing major changes on how it makes money using the App Store. Dave Wilson tracking the story. Dave, do we really yet understand the implications of this?
Well, probably not all of them, but, the bigger issue, and it's one that Apple and also to some extent Google's owner Alphabet is facing, is whether they can maintain their own payment networks and require people who develop apps, companies who develop apps, to use it. I mean, that's been the issue. That's why Epic Games went to court. And the judge ultimately ruled that it was an anti-competitive practice on Apple's part to require them to use the App Store, pay the 30% fee that went along with that. And so now you have the potential for developers to offer their own payments and for Apple or for Google to have to go ahead and use them. Now, I mean, there are issues in terms of where the case is at the moment. That said, I mean, you have this potential with, $20 billion, according to analysts, in annual revenue at stake. 75% profit margins. Now, they don't report App Store revenue separately. Apple has a services business as part of that. And, almost 20% of total revenue last fiscal year. They're looking at analysts 18% for this year, which ends actually in the end of September. And then you look at the shares. I mean, just a week ago, they were at a record, though they ended last week with a decline of 3.5%, which was the biggest since February. So definitely some volatility there.
Yeah, but, still really close to those records. Also, new phone coming out tomorrow. What are we going to see?
Well, probably the biggest thing is, satellite capability. There was some reporting on that. There was, concern of whether it was going to be a broad access, but it looks like it's only going to be for emergencies. And as far as the iPhone goes, same price for the base model as last time, and many of the same features, too.
All right, I think I still have a 10. I think I might be good. Dave, thanks a lot. Bloomberg's Dave Wilson joining us there. Coming up, Congress is back. To-do list is getting infrastructure bill and human infrastructure bill passed. We'll break it down. This is Bloomberg.
He will not have my vote on 3.5, and Chuck knows that. And we've talked about this. There's no way we can get this done by the 27th if we do our job. There's so much differences that we have here, and there's so much apart from us where we are as far as I'm giving you different things. I've been talking, I'm working with people, I'm willing to talk to people. It makes no sense at all.
That was Senator Joe Manchin, Democrat from West Virginia, casting doubt on the infrastructure bill. Here to discuss all of those challenges, Courtney Rosenberger, Strategas Securities Managing Director for Policy Research. She joins us now. Strategas is part of Baird. Okay, so we have a timeline issue and we have a content issue. Walk me through how you see this evolving over the next few weeks.
Yeah, so I mean, Senator Manchin's comments exemplify the struggle that's not just Speaker Pelosi having to deal with moderate versus progressive Democrats in the House. Democrats are also going to have to deal with different bills coming out of the House and the Senate and having to conference them together. So the idea that this is all going to be finished within the next 2 weeks, finished by the time of that bipartisan infrastructure bill deadline by September 27th, we don't think the reconciliation bill gets there. We're looking at getting into October, potentially even November for the reconciliation bill, because there's so much that still has to be dealt with in terms of finding a way to get agreement for this bill to pass.
Yeah, the timeline looked pretty optimistic from the get-go. One way maybe this gets resolved is figuring out what number can be paid for. So what do you think? What number can be paid for?
Yeah, so in our belief, we think that you're going to get about $250 billion of spending per year and $125 billion of tax increases per year. And I put that in per year terms because some of what you might see between the Democrats on the progressive and the moderate side is maybe they bring down the time frame of this bill from 10 years to 5 years. So you get a smaller headline spending bill or spending number, but you get the same amount of spending per year. Also differences in talking about this in terms of gross spending versus net spending. There's a few ways that the progressive and the moderates can both spin this where they win and get passage.
Oh, that's interesting. Okay, well, that kind of makes sense on that front. What kind of tax increases are we going to see? Because from a market perspective, I mean, completely ignoring it versus like when you had the President Trump corporate tax cut, there was a big boost to those companies.
Well, we saw a lot of the movement in those companies levered to the tax cut around when the House actually passed the tax cut in 2017. We didn't see a lot of movement in those companies levered ahead of time. So it's possible that as we now get further into this process, we start to see companies digest it. But we have been surprised. We run a basket of Biden tax losers, and they haven't turned over yet. But it was interesting in the document that came out of the House over the weekend. You know, President Biden's plan was very negative to multinationals, raising the GILTI tax rate from 10.5% to 21%. His shield proposals, limiting deductions for companies operating in low tax jurisdictions. We saw a little bit of a switch in what was leaked out over the weekend with a higher corporate tax rate for domestic US than we were anticipating, going up to 26.5% versus 25%, and a lower GILTI tax rate than we were anticipating. Our base case was never 21%, we were at 18%, but a GILTI tax rate coming in closer to 16.5%. That's a pretty big switch in terms of, you know, who's bearing the brunt of this corporate tax increase.
Courtney, the thing that really caught my eye over the weekend was this kind of slightly left field 3% levy on the super wealthy. Where did that come from, and has that got legs?
You know, I think that that's kind of a nod to the progressives. They're going to try to be throwing out as much as they can in terms of these tax increases because they need to pay for this legislation. There's not an option via reconciliation to not pay for it. So they're going to be throwing out as much as they can and seeing what sticks. Progressive Democrats have wanted more tax increases on the wealthy. You saw some of those tax increases that would hurt the wealthy come in lower than anticipated, looking at kind of the capital gains tax rate increase. So that could just be a nod to get those progressive Democrats, you know, behind a lower capital gains tax increase, but then giving them something on the super wealthy to kind of appease them. Does that have legs? You know, again, everything that comes out of the House, we're still going to see things in the Senate that are probably going to be different. We're not anticipating to see that in the Senate, but it's certainly possible. And then they're going to have to conference those bills together and see where they can get all 50 Democrats on board and where Speaker Pelosi can get this passed without losing more than 3 Democrats.
Where's SALT? I haven't heard anything about SALT, the state and local tax deduction.
Yeah, that's a great question. That was not in the document that came out over the weekend. That was a big surprise because we had been hearing about full reinstatement of SALT for 1 year and then partial reinstatement. Again, SALT's one of those TCJA provisions that expires after 2025, so they didn't have to deal with it long term. It's, you know, a sticking point for moderate Democrats. It's something that they've demanded, and so that it's, you know, needed to get their vote on this. There's enough moderate Democrats in the House where not including SALT could be a big roadblock. We do anticipate that some partial reinstatement of SALT is going to show up in the final legislation.
Okay, let's take a step back and figure out what this means for the various personalities involved. I'm curious as to what Senator Sanders is going to make of all of this. He has some expectation that we're going to see a significant pickup in spending. In fact, I think he probably did a deal with the leadership on making that happen. How fractured could the party be at the end of all of this?
Well, I think, you know, looking at this, this is President Biden's big fiscal policy agenda. It's probably one of the last major legislative items that they're going to get done through the midterms. So there's just really a lot of momentum within Democrats to get this over the finish line, and, you know, they'll deal with it afterwards. So there's not, you know, all this concern about Senator Manchin kind of killing the entire bill or Senator Sanders killing the entire bill, there's going to be a lot of back and forth in the next couple of weeks, potentially the next couple of months. But in the end, they're going to come together, in our view, because this is, legislation that Democrats have been trying to get for years, and they know that this is potentially their last chance ahead of the midterm elections.
So what's the political capital? Different kind of question. How involved does President Biden need to be in this? So I feel like if you had rewound it a few months ago, you would have said he has great political capital, right? Cases were trending lower for COVID. Delta hadn't really hit yet. There wasn't Afghanistan. There wasn't Hurricane Ida. There wasn't a Nicholas storm now also moving towards the U.S. Now he's got to deal with all that. What role will he have to play or not?
No, that's a great point. He went from an approval rating over 50% to 46% in less than a month, and his political capital has certainly trended downward with Afghanistan and COVID-19 and inflation concerns. Those are all issues that could, again, be headwinds in September for Democrats as well. And so I think that's part of the rush that you see from Democrats, knowing that they do need President Biden to whip Democratic support for this measure to make sure that progressives and moderates stay behind it, but knowing that his political capital is starting to wane. So they want to get this through as quickly as possible, as Biden has the most political capital as possible.
Courtney, we're going to leave it there. Great stuff. Thank you very much indeed. Courtney Rosenberger of Strategas, a Baird company. Thank you very much indeed. Alex, you look at what is going on and you look at how quickly President Biden's numbers have tanked recently. Obviously, Afghanistan is having a fairly major impact at the moment. Yeah. He does need a win right now. And it does feel as if this is going to take a lot longer than we anticipated. And I keep reading note after note saying that the midterms are going to be super tough. Maybe the Senate goes, maybe the House goes, or maybe both go. So the timeline is really short to get stuff done.
Yeah, and we can't underestimate the Delta impact in that the vaccine mandates are not necessarily going to make President Biden any more popular. Also, if we are seeing everyone go back to school and cases rise, because that's what happens when you reopen in some way, that's also going to have a material impact as well, which also makes the booster conversation much more political potentially than scientific, because he's going to need a win, right? And it's going to be a lot easier to say, you get a third booster, go. Kids, go get vaccinated. Is that going to actually help him or hurt him? And that's going to put some more political pressure on that scientific question.
I thought we'd already declared victory when it comes to the virus. That one looks like it's going to come back and hurt.
Done. Totally done with that.
There's a great report on the Bloomberg talking about the fact how bad it's going to be this winter. We're going into peaks and troughs. There are more peaks still to come. We don't know how bad those peaks are going to be. This expectation that things are going to get easier with every peak, i.e. the virus is less deadly. Maybe that's been called into question. Anyway, up next, what are we going to do? We're going to take you back to the energy conversation. Oil touching a 6-week high. European gas prices are absolutely ripping higher. It could be a very, very tough winter for Europe if this carries on. We'll talk about that next. Goldman Sachs saying the oil rally is going to carry on until year end. Jeff Curry's call. He'll be joining us next. He's the head of commodities over at GS. This is Bloomberg.
Bloomberg Markets, I'm Rishika Gupta, and you're looking at a live shot of the principal room. Coming up, Lale Akona, the BNY Mellon Investment Management Market Strategist on Bloomberg TV today at 3 p.m. New York, 8 p.m. in London. This is Bloomberg.
Okay, let's talk about the issue that I think is going to be a major problem here in Europe as we go into winter. Everybody at the moment still feeling comfortable. The weather's nice. Give it a few weeks, things are going to get a little dicey because European energy prices are going through the roof. Take a look at some of the charts. Look at what's happening with nat gas. You look at what's happening with electricity prices across Europe as well. Take a look at, actually, the biggest problem over the last few days has been actually the lack of wind that we've been experiencing, which seems to be hitting some of the turbines, Alex. So nat gas prices up another huge lump today. We're up by another 5%. That chart, you take it back a little bit further, it's parabolic. Jeff Curry, Goldman Sachs Global Head of Commodities, joining us now to give us his take on this. Jeff, is this just going to get worse?
Well, I think this is a glimpse of what the rest of these commodity markets are really poised to look like in coming months. Because we argue that these markets have gone from a period of pricing demand recovery, the big recovery coming out of COVID, to pricing scarcity. We've now got demand levels well above supply levels that has drawn down inventories, leaving these markets extremely exposed to any type of supply or demand disruption. So you take your point, hey, the wind quit blowing in Europe, you got a pop in the demand for natural gas, you have no inventory, and boom, you're at $22 an MMBTU right now. Put that in perspective, you're trading at $5 per MMBTU in the US. But this has the potential to extend into other markets like oil, because you're now pricing above diesel and you can create that fuel substitution. So we like to argue this is just a glimpse of something that's probably going to be much bigger this winter.
Okay, so what's the next market that can have this kind of parabolic move? I mean, we have aluminum at 3,000 now. What's next?
Well, when we look at pretty much most of the metals markets, and we look at the gas outside the U.S., inventories are now getting towards critical levels, which means which market do you see the disruption in? When you see the disruption, that's the one that's going to spike. So it's hard to forecast when you get those disruptions, whether if it's demand or supply. But the ones that are now, I think, brewing in the background are oil and U.S. natural gas, where the inventories are beginning to decline, particularly in oil. With IDA has already offset 2.5 months of OPEC increases. The demand hit from Delta was not nearly as large as anybody expected. Markets in a deficit. You've already exhausted the pandemic inventory glut. So you're slowly getting to a point. You get any type of disruption as you go into the autumn, the potential for oil prices to explode to the upside is increasing, particularly if you don't get Iran.
Jeff, if they go up quickly, are they going to come down quickly? I think back to the lumber story. I think back to the iron ore story. They went up like rocket ships, and they've come back down really strongly.
Well, that is the feature of commodity markets. When you get into these low inventories, price spike, and then they come back down because what happens? The price spike kills demand, brings it down in line with supply. Then demand tries to pick up again, then prices have to spike again to bring the market back into balance. You think about all bull markets in commodities, that is how they're characterized. High levels of volatility, lots of spikes. And you think about the investment vehicles, let's say like the BCOM or the GSCI, they're intended to take advantage and bank that spike before it comes back down again. And that's what these commodity investment vehicles or this backwardation is intended to do, is be able to bank on that spike. Equities can't do that.
Jeff, it just seems like the distinction between, say, natural gas and, say, lumber, you can just stop building a house, but, like, Guy can't let his family freeze, like in the UK, no matter how many sweaters that you put on. So I'm wondering if, instead of demand destruction, is it going to be substitution? So you're going to go to coal instead of natural gas, because now it's a lot cheaper, or you're going to switch to different types of energy. I mean, like...
Absolutely. When we say demand destruction, substitution is another form of demand destruction. You just move into another form of the commodity that is at lower price. And you can sit there until you tighten that market. So absolutely, we're already seeing that, particularly outside the United States. I think the big question, Mark, right now is how many diesel type of small generators are being used around the world to deal with this power crisis that's developing. And we already saw it in Asia earlier this year. So it's not unique to Europe. It's happening because we've not been making substantial investments in the ability to supply and deliver power and natural gas around the world.
Jeff, we've made huge investments here in Europe in the form of Nord Stream 2. It's finished. It's about to be certified. My real surprise at the moment is there's not much nat gas coming out of Russia. Is that going to change? How much of this is geopolitical?
Well, I mean, obviously, you had the disruptions. They weren't geopolitical. They were due to technical failures on pipelines. Now, the big question is, when will this be resolved? And then you have to ask the question, how much more gas is sitting behind those pipelines? You're seeing these same issues in oil and in other markets. Because, again, let's go back. We have not been making big investments in other types of long cycle activities around the world due to poor returns lots of uncertainty about the forward. What do you know to invest in when the uncertainty around climate change is as high it is, and what technologies are going to be used? All of that has discouraged long cycle investment. So what have we favored? Short cycle investment, things like shale that had let's say a 12 to 18 month turnaround time, or things like iPhones that have an 18-month lifespan to them. We've discouraged investment on a 5 to 10 year horizon. And now we're beginning to see, the implications of that, particularly again, demand levels are now at those really high levels. And one last point I want to make about commodities, they depend upon the level of demand, not the growth rate of demand. When that level of demand is high, I don't care if it's going up or going down, but if it's above supply, it stresses the market.
Hey, Jeff, let me take the other side for a second. Ed Morse over at Citi had his note out today as well. And he is more constructive short term, but by mid-2022, he sees shale production coming back more than the market expects. 35% capex rate when it comes to Saudi Arabia as they try and get sustainably up to 13 million barrels of oil a day, and plus Russia and potentially coming back as well. How do you combat those factors?
Well, no, the question is at what price do you see that investment flow? That oil is out there. We know the shale is there, but you got to get the rig counts up. And right now we're at 73. We've seen 79. And that was insufficient to get the rig counts up. Why? You have ESG issues that make it difficult for the drilling to actually occur. You have commitments by these companies for share buybacks, variable dividends. All that's going to use the cash to do something other than drill. You look at the issuance of debt of high yield in the sector, it has been focused on paying back previous debt, not on drilling. So I agree that oil's in Saudi, that oil's in Russia, that oil's in the US shale patch. But you got to get money to it. And that's the big question mark right now, because even take Saudi Arabia, it's committed to the drilling, it's contracted the rigs, but the rigs are not in the field actively drilling right now. And so the same thing in Russia. We got to see the actual money flow into activity. And I don't know where that price level is. There's still a big question mark at where is that new equilibrium price? And then once they start doing it, what kind of inflationary pressures do you create within the industry and other types of bottlenecks when you put stress on the system? When was the last time we ramped up drilling activity in this industry? It was third quarter of 2018. That was a long time ago. We'll find out the ability for it to do it again.
Yeah, and copper and aluminum were at totally different prices back then. Jeff, thanks a lot. Really appreciate it. Jeff Curry of Goldman Sachs. Great to catch up with you. This is Bloomberg.
It's time for the Bloomberg Business Flash to look at some of the biggest business stories in the news right now. I'm Rishika Gupta. The global shipping industry is earning the most money since 2008. Freight prices have been driven higher by the booming demand for goods and a global supply chain that's collapsing due to the pandemic. The price to ship a 40-foot container from China to Europe has soared more than 500% in the last year. For the first time since the beginning of the pandemic, all of New York City's public school students were expected to return to class today. New York has the largest school district in the country with 1 million students. School staffers must get at least one dose of the coronavirus vaccine by September the 27th. Students aren't required to be vaccinated. And that is your latest business flash. Alex?
All right, thanks so much, Ritika. So, Guy, this was it. We kicked off school. My daughter's back in school today, and my question and my hope is how long does it actually last? So she was a little nervous, but as you can see here, we got some pictures from Dylan's first day of second grade. She seems pretty excited as they kind of wait in line. The line was like snaking around the block, and like all the parents and the kids wearing masks. The hope really becomes like, do they stay in school? There's going to be cases that are rising. There's going to be cases. So how does it wind up playing out? That's with one of her best buddies.
It's going to, sweet pictures. Nice to see it happening in some nice weather as well. It'll be interesting to see what happens in a few weeks' time when those lines are in the rain and the cold. I think it's going to feel very different. But day one back, really important that we've got kids back. The question, as you say, is how long? Here in the UK, we're not doing masks. We're testing still. That's still part of it. Today, the UK announced it's going to do 12 to 15-year-olds, but with one shot, it looks like, which tells you something. because the Pfizer shot is already relatively a low-dose shot, and the fact they're only really willing at this point to recommend one, I think, is quite interesting. But yeah, no, I think it's going to be a huge challenge. We'll see where we are at Christmas, but the expectations are that it's going to be a really bumpy road between now and then. Which bits do we want to prioritize, I guess, is the other question. Well, the teaching has got to be prioritized. What else do we need to prioritize? Are we going to continue to prioritize sport and all the other stuff?
Well, we saw this study, though, with all top scientists from around the world, did the study on boosters. We'll talk about that in the next hour. And basically said that we don't need boosters. Like, we'd be better off vaccinating as many people as possible without the boosters. And that's where the kids' question comes into play. If kids don't get it as much and as frequently and as seriously, are we better off sending those vaccinations somewhere else where we can get more population?
Or doing the kids. So Neil Ferguson here of Imperial College was basically saying, you want to avoid a big winter blow up in terms of cases, you've got to vaccinate the kids. Yeah. That seems to be the message that's finally percolating through here in the UK. We'll talk German politics in the next hour. This is Bloomberg.